Dividend investing is a fantastic way to generate passive income and build wealth over time. By investing in dividend-paying stocks or ETFs, you can create a steady stream of income that can help you achieve your financial goals and maybe even retire early. Now, one of the most common milestones for dividend investors is to pass that $1,200 of annual dividend income or the $100 per month milestone. Now, stay tuned because in this video, we are going to go over 5 different methods, 5 different strategies that any investor could use to generate $100 per month with dividends and show you just how easy it actually is. Now, make sure to stick around because we're going through all this and more. Right after you, please drop a like in this video and subscribe if you like content like this. So first things first, we're going to have to figure out exactly how we even calculate and figure out how much of whatever investment we're talking about we're going to need to purchase, need to buy, in order to earn $100 per month in dividends. Now, generally speaking, this should be pretty easy. All we're going to have to do is take our $100, which is our goal that we're trying to hit, and divide that by how much whatever stock or ETF's dividend is going to be paying on a monthly basis. So for example, if a stock or ETF, let's say, pays 25 cents on a monthly basis, and we want to figure out how much we have to spend, how much of that stock or ETF that we have to buy in order to reach our goal, we would then take $100 divided by 25 cents, and that would mean that we would need, in theory, 400 shares of whatever stock or ETF that is in order to get to the $100 per month in dividend goal. Now, let's say that stock or ETF costs $20 per share, just in theory. That means that this investor would have to spend $8,000, buy $8,000 worth of that stock or ETF to hit the milestone of $100 per month in dividend payouts. So the first method that an investor could use to get to the $100 per month paid out in dividends on a consistent basis is to invest into something like the SCHD ETF or the Schwab US Dividend Equity ETF. Now, SCHD is a great high-quality dividend growth ETF that's very diversified and has some of the biggest and best companies in it in the entire world. We're talking companies like UPS, Pepsi, Coca-Cola, and Chevron. Now, because this ETF does offer some decent capital appreciation, meaning that over time at least, the ETF has risen in share price, making many investors' initial investment much more valuable. This means that unfortunately, SCHD is not going to have that massive of a starting dividend yield. To be more specific, SCHD's dividend yield is around 3.5%. At least that's what it was the trailing 12 months. And the last dividend announced was around 66 cents, but SCHD does pay on a quarterly basis. So we could say that 66 cents per quarter equals around 22 cents per month or so. So if we were to do the exact math that we talked about a little bit earlier, the $100, which is our goal of dividends paid per month, and take the amount of dividends that SCHD pays on a monthly basis, which we figured out is around 22 cents per share. This means that in theory, an investor would need to purchase 454 shares of the SCHD ETF in order to earn that $100 per month in dividends from SCHD. Now, SCHD is currently at around $74.50 per share. So this investor in theory would need to spend almost $34,000 invested just into SCHD in order to hit that milestone. Now, the next method, the next strategy that we're going to look at in order to try to get to that $100 per month milestone is going to be to invest primarily in Realty Income Corporation, or ticker symbol O. Now, just like SCHD, Realty Income also has risen in price over time, making investors that purchased Realty Income a long time ago definitely pretty happy by the way the stock has performed. But if you're not aware, Realty Income is a real estate investment trust and currently owns around 13,100 real estate properties primarily owned under triple net long-term lease agreements with commercial clients and a lot of high quality clients at that. Now, Realty Income does distribute a dividend on a monthly basis, and the last announced dividend is around 26 cents per share. So if we were to take the $100 goal, divide it by Realty Income's monthly payout of 26 cents, we would need in theory around 384 shares of Realty Income in order to get to that milestone. Now, Realty Income is currently trading at around $58.50, which means an investor in theory would need to spend only $22,500 invested into Realty Income in order to hit that milestone of $100 per month in dividends. The next strategy that we're going to talk about is to go with something like the JP Morgan Equity Premium Income ETF, or ticker symbol JEPI, JEPI. Now, JEPI is a covered call ETF that uses a strategy of buying a basket of stocks and then sells covered calls in the basket to earn some pretty substantial premium and then income distributed to shareholders of the ETF. JEPI, as far as ETF price, is only up 8.46%, and as you can see, the overall ETF price isn't really doing all that hot, at least as of the last year or so. But JEPI does have a massive starting dividend yield of around 10%, at least that's what the trailing 12 months was. JEPI pays a monthly dividend, the last one being around 29 cents per share. So back to the calculator, if we were to divide 100 by 29 cents, we would in theory need around 344 shares of abbvie. Now abbvie is currently trading at around $55 per share, which means investors would need around $18,965 invested into the JP Morgan Premium Income ETF in order to reach that $100 milestone. Now the last two strategies are going to get a little bit crazy, so hold on tight. This is the Simplified Volatility Premium ETF, or SVOL. Now SVOL employs a short strategy and uses derivatives such as futures and options to create the portfolio. This ETF shorts the volatility index, and by doing so generates massive amounts of premium. But SVOL, as far as ETF price, is down around 10% over the last year or two. But the dividend is very juicy at a 16.9% trailing 12 months. Now SVOL's last dividend announced was 30 cents per share, which means in theory, if we go back to the calculator, we would need around 333 shares of SVOL in order to reach that milestone. Now SVOL is around $22.80 right now, so an investor in theory would just need $7,600 invested into SVOL in order to reach that $100 per month milestone. Now last but not least, for fun, let's look into the TSLY, the Yield Max Tesla Option Income Strategy ETF. This is a covered call ETF that buys shares of Tesla and writes call options on it. Now this ETF hasn't performed all that well as far as return on share price since the fund's inception, but the dividend yield, let's just say, is pretty insane. A trailing 12-month dividend yield of around 44.91%. Yes, you heard me right, almost 45% dividend yield. The last dividend payout was 83 cents, and that was as of the beginning of this month. Now, if we were to take 100 divided by the last payout, 83 cents, an investor in theory would just need around 120 shares of TSLY in order to reach that milestone. Now, TSLY is around $15 per share. So in theory, an investor would just need $1,807 invested in the ticker symbol TSLY, at least going off of the last dividend paid, in order to reach that $100 per month milestone. So there we have it, guys. Those are 5 totally different methods in order for any everyday dividend investor to reach the $100 per month milestone. Now, out of all the different methods or strategies that we talked about in this video, if I were to choose the perfect strategy, in my opinion, to use moving forward, since I'm an investor that really likes diversification, I would probably buy a little bit of everything. Buy some SCHD with more growth potential but a little bit less starting yield, buy a good amount of realty income, and maybe even some abbvie. And on top of that, I don't see any problem with having a very small speculative amount of some massive yielding instruments, things like TSLY or even SVOL. But the cool thing is that there's so many different ways, strategies, and methods for investors to reach that $100 per month milestone. But I want to hear from you guys down below. Out of the 5 different options that we went through, if you could only choose one of them, which one would it be and why? If you enjoyed this video, make sure to please drop a like on it down below and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.